A warm welcome to all on this journey of understanding the investment world. But remember, we are not financial advisors and viewers should do their own research. As we navigate the modern financial landscape, it's crucial to understand the tools at our disposal. Two such tools are initial public offerings, or IPOs, and initial coin offerings, or ICOs. These investment vehicles have become increasingly prominent in recent years, shaping the way we think about investing. IPOs are a tried and tested way for companies to raise capital, offering a slice of their business to the public for the first time. ICOs, on the other hand, represent a new frontier in the world of finance, allowing startups to raise funds by selling digital tokens or coins. Both have their unique characteristics and potential advantages, making them critical to understand for anyone interested in finance. With that said, are you ready to delve deeper? Now, let's dive into the world of IPOs and ICOs and explore their similarities and differences. First on our list, IPOs, or initial public offerings. An exciting term you often hear in the financial news, but what exactly does it mean? Well, an IPO is a process through which a private company transforms into a public one. It's like a debutante ball for businesses where they step into the spotlight and invite the general public to buy a share of their company. So how does this process work? It's like selling tickets to a show. The company, or show organizer, works with investment banks or ticket brokers to determine the number of shares to sell and at what price. These shares or tickets are then made available for purchase by institutional and regular investors, allowing them to own a piece of the company. The money raised from selling these shares is then used by the company to fund growth and expansion. Now, why would a company choose to go public? Well, aside from raising capital, going public can increase a company's visibility and credibility, attract and retain talented employees through stock options, and provide liquidity to the company's shareholders. However, investing in IPOs is not without risks. For one, there is the potential for overvaluation. A company's hype can drive its share prices sky high on the first day of trading, only for them to plummet later. Also, information about the company might not be as accessible or transparent as that of established public companies. Moreover, the company's management might be unprepared for the demands and responsibilities that come with being publicly traded. Remember, with great power comes great responsibility, and not all companies are ready for this transition. That's a brief look at IPOs, a traditional method of raising capital. But what about the newer digital method? Let's move on to ICOs. Now let's shift our focus to ICOs, or initial coin offerings. ICOs are a relatively new phenomenon in the financial world, emerging with the advent of cryptocurrencies and blockchain technology. They're a fundraising tool, akin to crowdfunding, where a company sells its own digital currency, often in the form of tokens, to investors. This is done in exchange for either fiat money or more established cryptocurrencies like Bitcoin or Ethereum. You might wonder, why would a company choose an ICO over an IPO? Well, there are a few reasons. First, ICOs can be quicker and less regulated than IPOs, making them an attractive option for startups or smaller companies that might not meet the stringent criteria required for a traditional IPO. Second, ICOs allow companies to tap into a global pool of investors, unrestricted by geographical boundaries. Sounds pretty good, right? But before you dive in, it's essential to understand the potential rewards and risks. One of the key attractions of ICOs is the potential for high returns. If a project becomes successful, early investors could see their tokens increase significantly in value. However, this potential for high reward comes with equally high risk. ICOs are highly speculative and unregulated. The lack of oversight means that fraudulent activities are not uncommon. The value of tokens can be extremely volatile, and there's also a risk that the tokens you buy might not be redeemable for anything if the project fails. In fact, many ICOs have turned out to be scams, with investors losing their entire investment. So, if you're considering investing in an ICO, it's crucial to do thorough research. Understand the project, the team behind it, and the problem it's trying to solve. Look for a detailed white paper, clear roadmap, and transparent communication from the company. With that, we've now covered the basics of ICOs. But how do they stack up against each other? Having understood both IPOs and ICOs, it's time to compare them side by side. Firstly, let's talk about accessibility. IPOs typically require a significant amount of capital and are often restricted to accredited investors, making them less accessible to the average individual. On the contrary, ICOs are quite democratic in nature. They're open to anyone with internet access and some cryptocurrency, allowing a wider range of people to participate. Next, let's discuss risk. IPOs, while not risk-free, generally come with a level of security. They are regulated by financial authorities, and the companies have to provide detailed financial reports. ICOs, however, are a different story. They are largely unregulated and have been associated with scams in the past. This doesn't mean all ICOs are bad, but it does mean the risk is significantly higher. Now, on to potential returns. IPOs can yield substantial returns if the company does well, but these returns are often realized over a long period of time. ICOs, on the other hand, can provide astronomical returns in a short time, but they can also lead to total losses. Finally, we must consider regulation. IPOs are heavily regulated by financial authorities, providing a certain level of investor protection. ICOs, however, are still in a regulatory gray area in many jurisdictions, which can make them a risky venture. As we can see, both IPOs and ICOs have their pros and cons, and suitability really depends on individual investors' preferences and risk tolerance. We've come a long way in understanding IPOs and ICOs. We've delved into their mechanics, their differences, and their unique benefits. But remember, these are complex financial instruments. Never invest without doing your own comprehensive research. We're here to provide insights, not financial advice. The world of investing is vast and ever-changing. Thank you for joining us on this exploration of IPOs and ICOs. Remember to like, comment, subscribe, and hit the bell notifications for more insightful content. Until next time, stay curious and keep exploring.